Yeah, so it was the first time that we saw since mid-June that the crude prices are actually dipped on an intraday basis to below the mark of $80 per barrel. In fact, in the month of July, we are tracking a decline of almost 8% already on the prices of crude. And of course, a lot of impact which comes to individual stocks. For instance, it's positive for the OMC, so your HPCL, BPCL, IOCL of the world stand to benefit with respect to that. It's a bit negative, understandably so, for the oil explorers. So you have HOEC, ONGC, Oil India, which might be on the back foot. The users of crude, the likes of tires, paints, and other ancillaries are something which tend to benefit even aviation to that extent, given the fact that all of these are actually the users of crude as well as crude derivatives. Specialty chemicals is also something which is in focus, but you'll have to go through individual names there to see which company gets impacted how. But clearly, I think if you're looking for a Goldilocks scenario for India, this just adds to the cherry on the top. Crude prices being below $80 per barrel, but we'll have to see how long really it sustains.
Stansha, okay, crude is down. Let's assume that crude stays lower. So which company or which sector benefits disproportionately and which sector will benefit in a lag effect? I think this entire supply chain of paint, chemical, all that will benefit in next quarter, because there would be inventory losses, there would be price through breakout, there would be pass on, there would be discounting which changes. That does not apply until and unless there is a structural decline in crude. However, aviation, I mean, that would be benefiting immediately. I mean, you fly and you come down, crude is cheaper. You go up again, you come down, crude is cheaper. When I say crude, ATF. So I think aviation becomes the first disproportionate beneficiary, even if crude prices stay low for a short period of time. Now, for a lot of other sectors, well, optically you could say that, okay, paint, 70% of the total cost comes from oil and oil derivatives, but a lot of that stuff is passed through. A lot of that stuff is going to take at least a quarter. So I will not be surprised that for some of the chemical companies, the immediate first cut would be that they actually would have to say inventory loss, or there would be some pass through. So don't jump and buy chemical stocks or paint companies or intermediaries just because crude is down. I think if you're really looking at a crude trade, it is more with OMCs and it is more with aviation.